TheoTrade. This is Don Kaufman. April 19th, 2021. Minutes to go to the cash close here on this Monday afternoon with the S&P futures trading down some 27 handles. There is the feeling, if you will, of volatility in the air. And I'm actually going to explain to you in just the next few moments why it does appear that volatility is making a bit of a comeback. First and foremost, in addressing the larger marketplace right now, which of course is the S&Ps, if you take a glance at them, again, with a few minutes to go to the close, so they're down, 0.6, 0.7%, which is still net negligible. However, when we start to look around a little bit at some of the usual suspects, and by that I simply mean what are the sectors that have really been driving this marketplace higher? I mean, obviously, if you take a look at the S&Ps, they've exploded higher. The Nasdaq has exploded higher. But really, the underpinnings of that, one of those, of course, would be undoubtedly the monsters of tech. Now, the monsters of tech, this is the conglomerate symbol that we built, which is Apple, it's Amazon, it's Facebook, it's Google, it's Microsoft, all combined into one lump sum that's actually only down about 0.5%. So you're not getting leadership in terms of sell-side activity, specifically out of the monsters of tech. Next on the docket, you would have to look towards financials. Financials unequivocally have taken the S&Ps, to all-time highs, and yet they're only down here just shy of about 0.5%. So you're looking at the S&Ps, and they're down some 0.6%, and of course you're going to point out, well, the financials are only down 0.4%, 0.5%. The monsters of tech are only down 0.4, 0.5%. You can look over at the energy sector, and the energy sector, it helped the S&Ps back here, but it's only down 0.3%. What gives? What's driving the S&Ps at this point in time? This is actually something I brought up on the weekend video. It's Tesla. Tesla unequivocally is moving, all right? The S&Ps is moving the Nasdaq as well. So what you're looking at right now is a little bit of sell-side activity in the marketplace. And there's no question, some of that sell-side activity, it could grip hold in the days to come. But the sell-side activity isn't really what's catching my attention today. It's some of the other activities specifically to volatility. And there's this incredible right now concentration of liquidity in the marketplace onto which it's just the likes of what we've never seen before. So let's get to work and explain a couple things. First of all, before I go any further, and again, I like to go a little bit sector by sector, just display to you. Before we go any further, it is also apparent the SPX. The SPX had about a $56 expected move, and it's already, for the most part, about halfway home to the lower edge of the expected move on the week. I would go ahead and say that you should anticipate, if you will, the marketplace breaching the edges of the expected move higher or lower this particular week. Again, largely predicated on, well, what I'm about to show you now. There is movement on the volatility front. Lots of people, of course, look at the VIX. I'm less, inclined to discuss the VIX because the VIX, it's just I kind of call it like the figment of the SPX imagination. It's for the most part, the supply and demand dynamic of the options inside of the SPX. And yes, the VIX is absolutely bid higher, has faded off of some of the highs where it got to 1861. Nevertheless, it's up some 9% today. Now, you could actually glance over at the volatility futures, but I'll be very frank with this. The volatility futures that you might be looking at are only 2 days left to live. The more interesting area for the volatility futures, and I'm literally going to freeze the screen because I think this is so important right now. These 30-day volatility futures, that's a real move, all right? So and say, it's only 84 cents. It's an 84-cent move, though, on a $20 underlying. That's a real move, and that's where I think that it definitely is catching our attention. especially given that the 30-day volatility versus, for instance, the 58-day volatility, there's a little bit of deviation between these two. So, and you should see some of that. Nevertheless, okay, some real movement in terms of the volatility futures. I scroll to the bottom of the screen, and all of your volatility contracts are bid, but most appropriately and specifically the VVIX. And I was mentioning this and have been mentioning this literally now. We're into the third week of this. There was a very large volatility bidder, okay, that came in almost 3 weeks ago now. And that was the bottom of the VVIX. Now, the VVIX, to remind everybody, this is the volatility of the VIX options themselves. Okay, somebody out here is hedging. We're clear north now into the VAMA zone. The VAMA zone is roughly anything, if you will, north of the 110 region. And that is effectively like duck and cover. So if you're asking, the question, is volatility making a comeback? Absolutely, unequivocally. Like the marketplace right now is, in fact, pricing that volatility is making a comeback. And, if the marketplace were to turn around and just rally back tomorrow, right, you should not be surprised. Nevertheless, okay, this VVIX is not going away anytime soon, and it's going to continue to perpetuate volatility into the S&P. So again, if you have that quick, knee-jerk reaction when we rally back tomorrow, don't get caught off guard if you see some more sell-side activity throughout the remainder of this week. Looks like, again, we're in store for a bit more volatility. Last but not least on this evening's update, I wanted to give you a little bit more of a feel because the marketplace as a whole, you're trying to get a feel for this. Come on, it's a veritable slop fest, right? The financials are barely down. Nothing that has leadership in the marketplace is taking a leadership role. All that we basically have is bidders of volatility to go on right now. That's it. Okay, I mean, you're going to point out Facebook. Oh, it's down like 1.5%, but that's neither here nor there. Again, generally speaking, what's driving the markets right now? It's Tesla. Okay, so push that aside. The other really disconcerting area of the marketplace right now, let's go over to the S&P E-mini futures. There are literally seconds left in the trading day. Now, we were actually clear up to almost 1.5 million contracts. So, hey, listen, there's some okay size. In the past, and I say past, but if you look back really any time, almost in the last 9 months, to do 1.5 million contracts is kind of like the norm, and we've been struggling below that. But this is not about the S&Ps, okay? What I've noticed is on a given day, the total number of option contracts that have traded have been in the neighborhood of close to about 40 million option contracts day to day. This is something obviously I can show you with an OCC report. That's the Option Clearing Corp report. Now, the most interesting thing of this, all the option volume is being done in just a handful of underlyings. Look at Tesla. Okay, you're like, oh, but that's Tesla. Okay, so it did 1.1 million contracts here with 37 seconds left in the trading day. At the exact same time, you start to look a little bit off the beaten path. Okay, TLT, you're like, oh, but nobody ever trades that. You're right. Okay, so 80,000 contracts. Here's the financials. I mean, the financials are only, it's 35, dollar underlying. That's this morning I, tuned into this and it only had 20,000 contracts, 2 hours into the trading day. This is really, really light size in here. What we're getting right now is a pure, unadulterated concentration, people. There's the closing bell. Pure, unadulterated concentration of liquidity. As I said a moment ago, on an average day, we're only doing about 40 million option contracts. Right here inside of the spiders, you can account for 5 million of them. Tesla, okay, there you go. That's good for another million. You tune into the SPX, the mother of all products, and the SPX is good for 1.2 million. You look at something like the VIX, another 500,000. I mean, you got to realize, all right, you can look at about 10 products, 10, and it accounts, okay, for half of the options contracts that have traded on a given day. It is incredibly alarming to see that amount of concentration, if you will, of liquidity into a handful of products, and more specifically into a handful of products that are clearly and very concisely moving the marketplace as a whole. Nevertheless, the S&P's at the bell, down about 20 handles. Again, it's not so much about today's sell-side activity. It's about the fact that volatility is starting to make a little bit of a move. The concentration of liquidity is, in fact, picking up. Okay, all of these combined lead us to believe that volatility is, in fact, about to make a comeback. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.